Welcome to Government Contracting Weekly, sponsored by AOC Key Solutions Incorporated. Government Contracting Weekly is the only television program devoted exclusively to the competitive and dynamic world of government contracting. A world where coming in second place is not an option, but where principle-centered winning is the only approach.
Good morning and welcome to Government Contracting Weekly. I'm your host, Jim McCarthy. For many weeks now, we have been hearing and reading a lot about Affordable Care Act, with a lot of rhetoric from both its supporters and its opponents. But that's not the focus of our show. This morning, we are here to talk about how the launch of the ACA will affect government contractors, as it can directly impact your pricing and your ability to recruit. Today, we'll present an overview on what you need to know to be compliant with this new law. Joining us today is Stuart Tauber, a principal with the Meltzer Group, along with Spiros Komis, the General Counsel for C2 Essentials. As always, there's a lot to cover, so let's get right at it. Okay, so Spiro, tell us a little bit about your background and your experience with the ACA, if you would.
Thanks, Jim. I'm happy to be here. I'm the General Counsel to C2 Essentials. We are a forward-thinking, market-leading HR outsourcing firm that represents clients in the government space in 50 states and 14 countries. What we do is I work alongside business leaders and their in-house and outside counsel to manage a workforce of approximately 5,000 employees. Compliance is critical to our operations, and it's extremely important to our clients. So what I do is I work with these clients to develop and implement strategic policies that not only ensure compliance with emerging regulatory and legislative requirements such as the Affordable Care Act, but also we leverage those compliance obligations into competitive advantages. So really what we are about is strategic compliance. The Affordable Care Act is central to our mission at this time and has been really for the past 18 months because it's evolving and it's emerging and the rules are not necessarily as clear as they should be or could be, and because we have these new delays that have come forward, now is the time that we're working with our clients to develop those strategic policies.
Thank you. Well, Stu, how about you? What is your experience with the Affordable Care Act? Tell us a little bit about your background, your company, whatever.
Sure, thanks, Jim. So I'm a principal at a regional benefits consulting firm called the Meltzer Group. And I would say we've probably been on the front line of the Affordable Care Act with our clients because in large part we're representing them to insurance companies for their employee benefit plans, in large part their health insurance plans. And so under the Affordable Care Act, health insurance is that linchpin piece for which is being implemented. So the last 12 months we've been incredibly busy, probably more busy than we would hope to be, advising our clients, as Spiro mentioned, on the regulatory and some of the compliance issues that are coming up, but more frequently just answering questions as what can we expect out of the Affordable Care Act? Are premiums going to be increasing? Are employees, what differences are they? Key questions, what are they going to be experiencing after January 1st?
Thank you. So we're here today to talk about the Affordable Care Act. And let me just preface my question by saying industry is confused. Okay? It's crazy out there, and people, conflicting stories, different regulations, different time frames. So do us a favor and do our audience a favor, help sort that out. What is your definition of ACA right now?
Well, I think the easiest definition is effective January 1st of 2014, there's going to be what's called the individual mandate, meaning that every individual American is going to have to maintain a qualifying health care plan or pay a penalty. And the penalties vary and will change over the coming years. That's on the individual side. Our firm doesn't spend a lot of time consulting individuals. On the business side, which is the question I think you're referring to, Jim, it's still evolving, but in large part we haven't seen impactful changes from employers on making significant changes in their health plan design, nor have we seen insurance companies charge significantly higher rates, or what I think the goal of this is to have health rates come down. We haven't seen that either.
Haven't seen that yet. Okay, Spiro, so do you agree with my premise that things are crazy, and help us sort that out? Okay.
I agree that this is a very challenging time for employers of all sizes. I think Stu accurately represented what the nature of the individual mandate is, but for purposes of our discussion, the employer mandate is much more powerful in terms of what it means to our clients and to our audience. The employer mandate, really the regulations amount thousands of pages, and we have rules from the Department of Labor, the IRS, as well as Health and Human Services, as well as the actual legislation itself. If you take all of those rules and you take all of those regulations, you come up with really one statement, and that is that a large employer must offer minimum essential health coverage to 95% of its employees or likely risk paying a penalty. Now, that definition is deceptively simple. What is a large employer? Who are large employers? Okay, there are thousands of pages of transcripts during hearings, between Treasury Department hearings and Department of Labor hearings, to determine what 50 employees truly means. We hear the buzzword 50 employees. What does that mean? Well, it means those working 30 or more hours per week, plus a fraction of your part-time employees. It also means the aggregation of subsidiaries, affiliated entities as well. So the first question that I think all employers need to address is whether or not they're subject to the Affordable Care Act. The second question is, if they're a large employer, what type of coverage must they offer? The buzzword with regards to minimum essential health coverage is 60%. 60% represents the actuary value of the policy that's going to be issued. And what that means is there's a huge misconception among employers that employers must pay 60% of the premiums associated with the policy that they're compelled to offer. That's not accurate. What is accurate is that the policy that is offered by the insurer and the underwriter must cover 60% of the projected costs for this individual. The third issue is affordable. Is the plan that a large employer offers affordable? There are a lot of rules, but the one safe harbor rule that most employers can rely on, at least into 2014 and possibly 2015, is the issue of 9.5%. You're going to take an employee's W-2 wages and you're going to determine whether the premium offered for self-only coverage exceeds 9.5% of their wages.
And if it does?
And if it does, then you are not complying with the requirement of the Affordable Care Act. And we enter into the area of penalties. Now, penalties apply in two instances. The first instance is where a large employer simply does not offer coverage, and the rule is that for any employee that obtains coverage through a newly formed exchange and receives a tax subsidy because their income does not exceed 400% of the poverty level, then a penalty in the amount of $2,000 per employee per year will be assessed against this large employer, with the exception of the first 30 employees.
Okay, so just listening to you speak, it is very complex. There is some definitions, but they're nuanced. It's a highly nuanced situation with a lot of conflicting regulations still going on.
Absolutely, okay. Jim, and I suspect that the courts, both federal and state, will be addressing those nuances, specifically the definitions, into the next 3 or 4 years.
Thank you. Spiro, you sort of referenced implementation delays earlier. What exactly has been delayed? What's the impact? What's the import of that? What's the story there?
I think the biggest delay, especially for our audience with regards to the employer mandate, is the delay of the so-called player pay penalties. Those penalties are essentially the essence of the employer mandate. It's the consequence for not offering minimum essential affordable coverage to your employees if you are a large employer. That has been delayed into 2015. Alongside with that delay are certain exhaustive record-keeping requirements relating to what insurance is offered, the value of that insurance, the cost of that insurance, who subscribes, who's full-time. These very highly administrative and overwhelmingly burdensome record-keeping requirements have also been delayed. There's also been certain delays in the small business exchanges. These are exchanges that have been developed, or they're in the process of being developed, to assist small businesses specifically with 25 or fewer employees, from offering health insurance products through newly formed exchanges in exchange for a tax subsidy. There's also been an additional delay, and it's not so well known. If you look very, very, very closely in the new regulations and the proposed rules that are coming out of the Treasury Department in the maximum caps for both out-of-pocket spending and premiums. Those were supposed to go into effect 2014. The proposed rules and new regulations suggest that those are going to be delayed until 2015.
So it's still in flux.
Absolutely.
Very much so. So, Stuart, let me ask you this. I know, because I know a lot of your clients, and so on, I know that most of them, maybe all of them, care deeply about their employees. They want to offer really good health insurance, and of course at good rates. But so the question I'm going to ask you is I guess hypothetical in a sense, but what would happen if an employer just said tomorrow, I'm out of this, I don't want anything to do with it, I'm too confused, it's too burdensome? What would happen?
I think in large part, probably very little would happen. In this particular marketplace, employers, as you mentioned, are very sensitive to retaining and recruiting high quality talent, and a benefits package, at least from what we see in our firm, we're consulting with clients, is a big part of that. We have not received, and Spiro highlighted quite a bit of information as it relates to sort of the regulatory and the implementation components of the Affordable Care Act. What we're seeing practically is employers saying, there's a lot of information. We want to make sure we're doing everything right. If they are offering employer-provided health care, they're going to be in compliance unless they're making radical changes in terms of how that premium is shared with their staff. We are not seeing that amongst our client base, and we have a pretty large footprint in this area, and in large part our clients are saying exactly what you're saying. We want to keep our employees happy. We want to offer a robust benefits plan.
Okay, so maybe in a few minutes we'll discuss the competitive implications of all this. Thank you very much. So let's talk about the competitive implications of the Affordable Care Act. And by that I mean, is it possible that a bidder in our government contracts market could gain a competitive advantage or suffer a competitive disadvantage by doing or not doing something with respect to the ACA?
I think a large part of the answer to that question probably lies in human capital. And again, with any sort of health insurance program, I think individuals look at that as part of their compensation. Where could someone be hurt? Where could there be a competitive disadvantage? I think if an employer was very reactionary and said, we want to be out of the business of providing employee benefits and health care for our staff, there is this large exchange now that individuals can go and shop for their own health insurance without any punitive measure regarding their prior health considerations. Spiro highlighted quite a bit of regulation as it relates to implementation and things that employers can do. One of the disadvantages that would be fallen onto employees is there isn't a efficient tax mechanism for employers to go ahead and provide a payment to an individual employee if they gave up their health insurance. It doesn't speak to Spiro's comment about the penalties involved, and there are penalties if an employer over 50 defined employees opts out. They are punitive, but if they want to provide a subsidy, there isn't an efficient tax way to get those dollars in.
So if the employer wanted to cash out, if you will, and give the employee money that he or she could then go buy their own insurance, is that compliant or not compliant?
Well, they could certainly do it. What's inefficient about that, about doing it that way, is on the income tax side. Because right now, one of the great benefits of employer-provided health insurance is that the employer gets to pay for these premiums, in effect, on a pre-tax basis, and individual employees get to contribute towards their health care payment, their share of the premium, with pre-tax dollars. That mechanism would be taken away if that individual went ahead and purchased on a private exchange.
Spiro, your comments.
I agree with Stu to a certain extent with regards to that pricing mechanism, but the rule is still floating around in the Treasury Department, so I think there is going to be some relief with regards to cash benefits that issued. But the issue here, Jim, is that we're talking about a monumental paradigm shift in the way that this country is addressing healthcare costs and access to healthcare. And what this means is that this necessity, this absolute important, next to salary, the most important function of an employee-employee relationship, which is healthcare, is through these newly formed exchanges and soon through these business exchanges, they're gaining access to coverage to relieve the employer of that obligation. And so whether we like it or not, healthcare reform is here. It's not going anywhere. And the clients that we see that are strategically addressing their compliance issues, meaning, I know I need to be more competitive on my government contracts. I know that I need to get my healthcare costs down. I also know that now I've got a lifeline, and that lifeline is these new exchanges. How can I comply with the Affordable Care Act so that I'm not subject to any penalties and incentivize my employees to get the same coverage or better for less money, making me leaner and more competitive?
That's the crux of it.
And I would so in the marketplace, we're starting to see that, and we've been doing some benchmarking on costs from traditional employer-sponsored plans, and looking at the exchanges that are sort of up and operating, whether they're state-level exchanges or to the extent we can get data from the federal exchange. We're not necessarily seeing an impactful reduction in the cost of health insurance premium, and that doesn't necessarily take into account trying to correlate as best we can an employer-sponsored plan that might be fairly comprehensive, and then the different metallic level plans on these exchanges.
Okay, so let me ask both of you the same question. Could there come a time where government contractors decide that we're getting out of the healthcare providing business, we're just not going to do it? Do you think that's in the cards, in your crystal ball? What do you think?
I don't think you need a crystal ball, Jim. I think that they are addressing that issue, and they are, notwithstanding these delays, they're addressing them now. The issue is cutting your costs. Much of this has to do with the elasticity of your labor force, both on a national level and a regional level. What business, what industry are you in? If you reduce your real wage rate by eliminating these benefits, or at least incentivizing your employees to obtain these benefits elsewhere, will that lead to a meaningful reduction in your workforce? Are you going to lose your talent? You're seeing in the less white-collar industries, or the industries where there's a lesser demand or a greater supply of a workforce, that failure to offer benefits is actually inelastic to a change in the supply of labor.
Well, I'm talking more in the government contracting arena, first of all, and because like Stu mentioned earlier, there was this companies try to do the best thing for their employees. I think that's a fair statement that we've noticed over the years. So if they get out of the healthcare providing business, are they saving money and therefore improving the competitive posture that you're talking about, or are they not going to save money in the end because it's going to cost about the same?
I think there's a to be determined. I really do. I think in the very near term, and again, just to highlight some of Spiro's comments, the complexity of this legislation and the implementation is sort of delaying some of these very large decisions from government contractors and from other large companies who may not be dealing in the government contracting space. And I know we have a particular audience here, but again, I think there's a common denominator with most employers that they do still view an employee benefits package as part of the overall compensation that they provide an individual, and sort of the recruiting and the retention of really solid talent. The question still comes up, what does my healthcare program look like for me and for my family? I think over time, the years to come, that narrative is going to shift significantly.
Well, isn't there a precedent of sorts? I'm thinking about the Service Contract Act and the health and welfare determination that's made. A lot of employers did go to the aspect of just cashing out their employees, giving them cash and not providing benefits. I'm just thinking, is that likely to happen here on a larger scale, even with white collar, not just Service Contract Act employees?
I think it's possible. Again, Spiro mentioned some regulations floating around in Treasury as having sort of a tax-efficient mechanism, either to provide a benefit subsidy, maybe it comes through W-2, that doesn't obligate maybe the employer to have to impute additional FICA taxes, or have that individual pick up additional FICA, federal and state income taxes, and perhaps even be able to pay for premiums under these the SHOP exchange with some kind of pre-tax dollars. I don't see that. I haven't seen that. I know you referenced some regulations. Until that piece potentially gets addressed, I still anticipate this year into 2015 and 16 that most employers are still going to be, in large part, the driving force.
A number of our audience members are small businesses or mid-sized businesses. So here's a question. What is keeping CEOs up at night, or what should be keeping them up at night? What should they be worrying about with respect to ACA and its implementation? Spiro.
Jim, I think there's two major components that CEOs should be frantically trying to address with regards to ACA. The first issue is compliance. How do they comply? But the second issue is probably more important. How do you comply and be competitive? The firms and the industry, in the government contracting industry, that are right now, notwithstanding the delay, right now aggressively tailoring a benefits policy to not only ensure compliance, both with the reporting requirements and the actual substantive requirements of the Act, but to then create cost competitiveness, whether it's a reduction in the overall costs or working with brokers like Stu to find new novel policies to meet the requirements, or pursuing government contracts that maybe incentivize use of the exchange to reduce the premiums and so forth. Those are all interchangeable. And so you can't really, if you want to think strategically about growing your business, keeping your business, you have to think both compliance and competition, and those two need to be married every step of the way.
Every step of the way.
Yeah.
What about you? What's your answer, Stu?
I think I would certainly agree with Spiro, Jim, in that when I'm sitting down and having a dialogue with the CEO or an executive at any one of our clients, particularly in the government contracting space, you know, they're going back to their human resources department, they're talking to their CFO, and they just want to make sure that from a compliance perspective, are we okay? Meaning, am I going to be facing any punitive or financial penalties by doing something that we should have done, or address something that we should have addressed in advance of full implementation of Affordable Care Act? Aside from that, I think the questions that will keep CEOs up at night are ones that are that have probably kept them up last year and the year before. What am I going to do to address this rise in cost of a very large line item, which is our health insurance premiums? And I don't think that CEOs are going to get a better night's sleep in the very near term, because the market is still evolving. You know, we still have a very finite number of providers that are aggressively offering competitive healthcare plans, and so with the smaller marketplace, we haven't seen a huge delta in terms of costs between various insurance companies.
So here's a very practical question that I think our audience would appreciate an answer to, and that is, what should government contractors be doing now to prepare for tomorrow, metaphorically?
Jim, I think that if you're a government contractor, irrespective of size, whether you're qualifying as a large employer under the Affordable Care Act, or whether you're just a handful of employees trying to win your next proposal, I think the issue is to seriously consider the limitations of the government contracting space, the change in the types of contracts that are being awarded, which we're now focused much more on price. And to focus on strategies and policies that, again, not only ensure compliance, but also leverage and bolster competition. So I strongly believe that any sort of strategy going into the next 12 to 18 months, government contractors of all size need to know what are the rules, whether they're affected by them or not, and to begin to implement through their attorneys, through their brokers, through their CFOs and their accountants, the policies that are going to ensure compliance and help them grow. Ultimately, with the focus being on reducing their costs, satisfying their workforce requirements, and being in a position to bid competitively on new proposals.
Thank you. All right, Stu, from your perspective, what should government contractors be doing?
I think, as specifically as it relates to sort of Affordable Care Act and sort of now the large conversation regarding healthcare and its accessibility and its affordability, is continue to educate your staff on what is it that my employer is providing, to the extent that we are still involved in providing an employee benefits package that includes health insurance. And I think what we've seen, particularly in the government contracting space with our clients who are in that market, that an educated employee who understands exactly what's being offered, how to better have a healthcare conversation, whether it's with their employer or with their physician, to digest exactly what the benefits that are being provided to them. And I think as consumers are being a little bit more enlightened, again, to this very high line item in their budget for their employers, that they should be good stewards of the benefits that are being afforded to them.
Okay, thank you. We had Joe Jordan, who is the administrator for OFPP, on the show, and he had a program that he's administering called Mythbusters. I want to give both of you a chance to bust some myths here respecting the Affordable Care Act. So could you give us one myth that you think is prevalent in the community, if you will, but turns out upon consideration not to be true?
Jim, I think that the notion that many admittedly fearful employers, particularly contractors, have, that the requirements of the Affordable Care Act will necessarily increase costs, both short-term and long-term, potentially driving them out of business, is unreasonable and unsupported by what we have to date. I think that, and Stu touched on some of this, much is to be determined. However, we are, as I explained, at a tremendously important period in our nation's history, where we are changing the way that our markets and every single industry, and especially the government contracting market, deals with the issue of exponential healthcare costs and a meaningful challenge to access to healthcare.
Okay, so your myth might be that it's not going to cost necessarily more. It's still to be determined.
Yeah.
Why don't you bust a myth for us here, Stu?
So I'll follow up on Spiros' comment and sort of correlate that. That the cost of a health insurance plan that a government contracting firm, both small, medium, and large, that those rates are going to be reduced in an impactful way. We simply don't see that. And I'm not saying that over the next 2, 3, or 4 years there might be changes in the marketplace, innovative products, carriers re-entering the marketplace, that they want to compete and they want to offer an additional menu item of healthcare offerings. But what we've seen in the very near term, particularly for our clients who are looking at their benefits package starting calendar year January 1, 2014, we have not seen a great reduction in costs. So the traditional concerns of a business owner over the last 2, 3, 4 years, when they're meeting with a firm like ours and looking at the line item, which is their health insurance premium, we are not seeing those costs come down in an impactful way. We're not seeing them skyrocket above what it has been, but
neither extreme may be true. They're not necessarily going up, they're not necessarily going down, it's still TBD.
Exactly right.
Is that part of it?
That's exactly right.
Thank you. However you feel about the Affordable Care Act, the one thing that we can all agree on is that it presents to the contracting community important issues that we all need to understand and act on. I want to thank Stuart Tauber of the Meltzer Group and Spiros Komis of C2 Essentials for helping us sort it all out today. I also want to thank you, our viewers, for once again joining us at Government Contracting Weekly and for making us a regular part of your learning regimen. On behalf of all my colleagues here at AOC Key Solutions, I'm Jim McCarthy, and I'll see you back here next week.
You've been watching Government Contracting Weekly, sponsored each week by AOC Key Solutions Incorporated. Government Contracting Weekly is the only television program devoted exclusively to the competitive and dynamic world of government contracting. For additional information, comments, questions, or suggestions, please write us at governmentcontractingweekly.com.